Curious? Take a close look at a physical US dollar. Strip away the ink and the history, and the intrinsic value of the paper in your wallet is zero. You are holding a simple weave of cotton and linen fibers. Value only exists here because of a government mandate. Imagine if the state forced everyone to buy a specific fuzzy pen under threat of imprisonment. Even though the pen is worthless, its price would skyrocket because the entire population is legally required to demand it. This is how the US dollar functions. You must obtain these specific pieces of paper to pay your property taxes, your mortgage, and your income tax. If you fail to get them, you lose your property or end up in prison like Wesley Snipes. The purchasing power of our money relies on this manufactured demand. It is a system built on the requirement that everyone, both at home and abroad, continues to need the dollar to survive. This map shows the architecture of that demand. Through the Petrodollar system, nations must purchase US dollars to buy Middle Eastern oil. To store this cash, foreign central banks funnel those reserves back into the United States by purchasing US treasuries. This constant global hunger for our debt allows the US to keep interest rates low and maintains a standard of living that would otherwise be impossible. We are effectively living on a subsidy provided by the rest of the world. This privilege rests on a single pillar: the world's willingness to use the dollar. If nations find a way to trade energy without our currency, the global demand for the dollar disappears, and our domestic economy loses its foundation. The turning point arrived in 2022, when the conflict in Ukraine triggered a massive shift in how the world views American financial power. The United States chose to weaponize the currency, freezing hundreds of billions of dollars in foreign exchange reserves belonging to the Russian central bank. This move sent a shockwave through every world capital. It proved any nation holding assets in dollars risks losing its entire national savings with a single keystroke if they disagree with US foreign policy. Rivals immediately began building an exit. Iran now bypasses the petrodollar entirely, selling its oil directly to China in exchange for Chinese yuan. Iran then uses that yuan to buy Chinese manufacturing equipment, weapons, and technology. They have built a closed loop of trade that functions perfectly without ever touching a US bank. Aggressive financial sanctions inadvertently gave these nations a reason to accelerate de-dollarization. By trying to force submission, the US effectively pushed its largest rivals to finalize an alternative financial system. While geopolitics drives nations away, domestic fiscal policy is making the dollar look like a liability to the few investors we have left. The math is becoming impossible to ignore. The US government collects $5 trillion in taxes, but spends $7 trillion. This constant overspending is driving the national debt toward a staggering $39 trillion. With foreign nations no longer buying enough treasuries to cover this gap, the Federal Reserve is forced to print money to fund the government, which steadily erodes the purchasing power of every dollar in existence. This chart reveals the ultimate global pivot. For the first time in 30 years, central bank reserves of gold have crossed above their holdings of US treasuries, surpassing the $4 trillion mark. Governments are choosing physical gold because it cannot be printed into oblivion by a central bank. It's the ultimate insurance policy for failing fiat currencies. Between the weaponization of the dollar and reckless internal spending, the US has lost the trust of the world's most sophisticated financial institutions. To understand why this matters to you, look at how lending works. If Michael Jordan asks for a loan, everyone wants to lend to him. Because demand is so high, he can dictate the terms, driving his interest rate down to 2%. But if an unknown person named David Freeman asks for money, there is no demand. To get anyone to take the risk, he has to offer a massive 15% interest rate just to get their attention. For decades, the US had the borrowing power of Michael Jordan. But as the world stops buying our debt, our demand is plummeting. We are becoming the unknown borrower. Without global demand to keep our rates low, the government must offer higher and higher interest to survive. This shift breaks the cheap credit model that the modern American economy is built on. For the average citizen, this results in a permanent spike in mortgage costs, auto loans, and the price of basic goods. Your paycheck is being squeezed by a system that can no longer export its inflation to the rest of the world. De-dollarization functions as a steady, grinding erosion of your personal wealth. It is a long-term decline that makes the average family noticeably poorer with every passing year. You can protect yourself by following the lead of the world's central banks. They are diversifying away from the dollar and securing their future with physical gold and gold-backed assets that can't be devalued by a printing press. If you don't take action to defend your assets, you are essentially allowing the government to pay down its massive debts using the value of your labor. By staying 100% in dollars, you are accepting a future where your standard of living is systematically sacrificed to keep a failing currency afloat.